Hey everybody, Tom Gentile. Welcome to another midday market report. Glad to be back. It is Monday the 14th. And if you can hear me, just chime in on the chat box. Let me know you guys can hear me coming in loud and clear. I was off last week, as were many of you. And so I'm back. I missed you guys. So glad to have you in the room with me today. We are going to be discussing, well, I got three big things I want to cover with you today here over the next 30 some odd minutes. And that would be number one, we'll look at the markets. We're going to look at what's going on mid-September, all right, because we are officially in the middle of September right now. Number two, I want to look at some patterns and see if there are any patterns out there in the marketplace that we can take a look at and take advantage of. And number three, what the heck is going on with TikTok traders? This is an area I want to show you some stuff that happened last week. It's really been happening since the stock split. And so I want to show you some stuff that is going on in the TikTok environment and what I want all of you in the room to avoid. So I'll show you what to avoid, all right? And that has nothing to do with my latest YouTube video, which is called Sell This Crap Now. If you want to take a look at that in your own time, let me put the link up there for you. That is the link that says From Tom Gentile. That is the latest video we have right now on the channel, youtube.com/Tom's Trading Room. Let's do this. Let's take a little walk over to the big room. That's where I want to go because, like I said, I've got three things I want to share with you. And the first part of what I want to share with you is what we call the market news and technicals. And let's do that. And to do that, I am going to switch screens. And so all of you in the room, let's, oh, you know what? You won't be able to see me unless I do one crucial thing right now. And that is switch back to the camera. So let's go to the camera. And what you'll see on the screen is my big room. Let me walk into the big room. And here we go. Get into focus. Hey, everybody. Welcome. Glad to have you here again. Middle of September. Three things on my mind today. Number one, let's go ahead and take a look at what's going on in the stock market. We'll look at patterns, and then we'll also look at what not to do in my eat, sleep, trade, repeat session. Let's get started. S&P 500 on the screen right now. And I've got right here a 20-day chart. And I brought up a 20-day chart because I want to show you what's going on here. Middle of August, S&P around 338, melt up, big melt up into last week. All right, literally went into last week, or really that was Friday, before starting to fall off. And we saw that fall off happen. And last week, what happened was we just really kind of fell into a trading range where we hit a floor of around 333 on the S&P. We hit a ceiling of around 342 on the S&P. And so today we're getting a little bit of lift in the S&P. Not much. I mean, well, not much compared to what we've seen in the last week. In any other area, this would be a fantastic day. But we've got to get above, and we've got to close above, really 342 before I get excited about the S&P. There's a lot of reasons I'm not excited about the stock market heading into the back end of September. We'll look at those in a moment. But let's take a look at bonds. This is the TLT iShares Barclay 20-year Treasury ETF. And as you can see, this is in a big box right now. We've got resistance up here just above 166. We've got support down here around 161. And as long as we trade in this area, this is not going to be a positive or a negative for the stock market. All right, so keep that in mind again. Support down here around 161 and resistance just above 166. Cash, double dollar index. Again, this one has been trading in a box since the beginning of September, as we've got lows just around 25 and we've got highs around 25.25. So literally for the last week and a half, trading in the box. Again, if we get above the double top at 25.25, this is not going to be good for the stock market because we'll see more traders coming into cash. If we get below the 25.05 area, really get below 25 itself. That's going to be a reiteration to traders that they need to get out of cash and get into something that can make them some money. So again, keep your eye on the box here for UUP. Let's look at USO. I've got to move out of the way here. I mean, literally down here, USO has been in a very tight range of around 26.5 to around 27.5. Right, so we've been in about a 1 point trading range ever since. Go back to the end of August. We were trading up here at 31. So 31, we dropped from 31. Let's put that on the board down to, let's call it 26.5. All right, so we're talking about really about a 7 point. 25 would be 6. 20, yeah. So we're looking at about 5 point drop roughly on USO. All right, what is 5 points? 5 points might not sound like much, but that's a 15% drop in the price of oil. Now, that has not spilled over into gasoline. I can tell you that because I gassed up the car again yesterday on another trip to the mountains, and diesel was still selling at over $3 a gallon. All right, so that is USO. Now, big one we want to look at, gold. Again, one of my biggest investments right now is in GLD. And as you can see, GLD, take you back to the month. We traded at all-time highs near 195. All right, coming out or in the middle of August, we were around 189 as a high. I've got a low down here, a floor at 181. And now you might say, well, wait, Tom, you've got some lows down here in the 170s, 180s. Why is 181 where you have this pegged as support? I'll tell you. The reason 181 is support is because that's where the closing numbers were. So if you take all of this information here and you see where the closes were, really the lowest close was down here around the 181. To me, the closing price is more important than a stab lower or a stab higher. That's where I see 181 as support on GLD. GLD is now trading above 184. Again, where are we going? All right, where are we likely to go? Well, we got to take out 180. This is 185 right here. All right, we get above and close above 185, and then we've got 187, 189, and then of course that big elusive number, which is really 195, would be all-time highs in GLD. All right, so we have looked at stocks, bonds, currencies, and commodities. And I've looked at the ETFs of each of those. That is SPY, that was TLT, that was UUP, USO, and GLD. I want to take a look at cryptocurrency, and I want to take a look at some patterns. All right, so let's go back into my podcasting room, and we'll talk about those patterns right now. So cryptocurrency, I didn't get a signal on it, but I did. I own cryptocurrency, and I added more to my cryptocurrency. I added more to my cryptocurrency position. All right, so I'm going to show you a chart of crypto. I'm going to show you why I added more to that position. And let's go ahead and do that right now. And then we'll get into patterns. So back on my screen again. Here we go. Yes, John, this is really live. If that didn't tell you, I don't know what would. Yeah, we'll get into the Robinhood and TikTok here in a moment. But let's slide. Okay, so cryptocurrency right here. And take a look at what's going on with Bitcoin. This is a 100-day chart of Bitcoin. And you've got, again, we saw the 9,000, 9,500, really good area of support. Then we jumped up and we had this area of support around the 11,000, 11,500 area. That quickly eroded, and now we're seeing new support at 10,000. And then I saw an area, we were hitting 10,000, 10,500. So I went ahead and bought in, and this was actually yesterday. I bought in just above 10,500. I think I ended up getting in around 10,005 and change. And so I added to my position in Bitcoin because I'm looking for that big jump. We've got the big jump up. A couple weeks later, big jump down, looking for that next big jump up. And this is an actual trade I'm looking at doing. This is not a long-term investment, although I do have, let me make myself clear. I long-term have cryptocurrency that I don't plan on selling. All right, not anytime soon. But then I also like to short-term trade and add to positions like Bitcoin when I'm watching the charts here. All right, so we had some really good support levels. And as soon as we get this down here, here's the volume. We get a big move, we get a big spike of volume like this where we get a lot of people jump in. I'm going to pull back on my on Bitcoin. All right, questions coming up. What platform am I using to look at these crypto charts? This is my platform. This is tomsoptiontools.com. All right, I have my own platform that I use because I have things that I can do that we don't see anyone else out there doing. And so I'm going to show you what I'm talking about right now. So let's move out of Bitcoin and let's get into stocks again. And the reason I want to get into stocks is because I really want to show you what I am looking at here. So going to stocks, this is something that's on my platform that nobody else has access to, is the money calendar. The money calendar is something that I have spent years and years on, and a lot of hard-earned money and sweat equity as well. What is this? This is a seasonal calendar that gives me the best buy and sell dates on stocks going back a minimum of 10 years. So when I look at this, and let's go look at today. Today's the 14th. It is a bullish day today. So when I look at the 14th and I look out, what's going on? We've gone through green, and now it looks like we're going to seasonally for the next couple weeks start to turn color here. And what this means is we're going to see more and more bearish opportunities popping up. So right now, if you take a look at the calendar, you'll see this is the 14th, 130 trades. I have 115 that are bullish and 15 that are bearish. But look what happens come Wednesday. Wednesday, I have a total of 69 trades. Now, out of what? And this is questions that a lot of you might have. Out of what? Well, out of all optionable stocks, okay? Out of and this number here gives me stocks 90% or greater. If it's going to make this list, it has to have 90% or greater historical accuracy going back a minimum of 10 years. All right. And so what I'm looking at here is this is just an overall view of the calendar. And what we saw the calendar really doing nicely into Labor Day weekend. We started to fall a little bit here in the 4th. But then, even though the green was coming in here, the calendar wasn't, or the actual market itself turned red. So is the market ahead of the calendar, right? I can tell you right now, guys, nothing's 100% perfect. I don't care what you're looking at, right? The only thing that's 100% perfect in trading is sticking all your money in the bank and doing nothing. But you'll also have a 100% chance of making nothing either. So when I look at patterns, I know going in that I can't guarantee that I'm going to be right going forward. All I can do is look at patterns and look for repeatable patterns that happen over and over and over again and take those patterns. So when I look at today and I say, all right, what do we have popping today? Now, I brought up September 14th, and all of these symbols over here have got some sort of green pattern going with them, which is bullish. Now, if I scroll down enough, I might find a bear or two, or 4 in this case. All right, we've got some bears down here at the bottom. But if I take a look at the top, and then I want to rank these because I have access to what the net profits were, what the accuracy was, what does the average profit look like, what's the end date? Well, what's the beginning date? Well, the beginning date is today. What's the end date of the pattern? I've got end date patterns right here. The last time it lost, okay? The last time it was a loser. And then something called power meter. And power meter is, it's really how trendy this pattern is right now. Kind of a what have you done for me lately number. So I like that to be positive. So what I do is I'll double click on this and re-rank it by power meter. And I see Lam Research at the top, and LNT, and NOC, and Booking, BKNG. But look what happens about 5 or 6 down. OLED and TSCO, 2 bears, are in the top area. So let's take a look at Lam Research for a moment. So if I want to do some further investigation, I'll click on LRCX. And I can see here that this pattern starts today. It's a bullish pattern. It runs all the way to October 23rd. I have the information right here that I need. All right. Net profit, duration in a trade, average trade, the accuracy over the last 10 years, max drawdown. All right. Max drawdown means how bad did it go against you? And then here, run up. Okay. And the run up is how great did it do? Now, this is the pattern. And you can see here for the last few years, I mean, this wasn't much of a pattern, but it was working. But in the last few years, we had a move higher. 2016, this stock moved $5.90 in our favor. 2017, the stock moved 30 points during the pattern. 2018 was the loss, $12.26. Remember the max drawdown? That was the worst that it got before the end of the pattern. So it actually dipped down lower than this and then closed. The pattern ended up closing down $12.26. But then last year, $29.84. Now, if I wanted to look at this and say, all right, well, let me see exactly what happened last year. I'm going to click on this bar and I'm going to see what happened. Here's what happened. The pattern tells me that Lamb Research had a big pop up on the final day of trading, of this trading this pattern. What happened on the biggest loser day? All right, the biggest loser day is it started out on a high note and then just kind of fell down. Remember that area where I said it dropped down almost 15 points at one point? That was it. Came right back up and then trended down for the rest of the pattern. But when you look at the remainder of the screen, you can see the pattern worked out really well in 2017 and then had some small winners going all the way back to 2010. So I might look at that one and say, you know what? That big loser in the front, maybe that's not something I want to look at. Let's go back to the day chart again and let's try again. All right. How does LMT look? That's a 12-day pattern. That's what that 12 means. All right. We'll go into LMT and we can see September 4th to September 29th is the pattern. Come on down. Okay. This one looks a little better. And the reason it looks a little better is because that loser was way back here in 2011. It was only 44 cents. But look what's happened in the last 4 or 5 years. All right, 451, 948, 1850. Last year, 227. When you average all this together, it looks pretty good. It looks like about, let's call it a $5 move. Okay, and what happened in 2019? Well, in 2019, it ran up. It was up $15 on the third day. All right, then it kind of back down, back up over $10, and then the final day it dropped. Right now, trading options on this, you can set targets where, let's say you have a double, right? Maybe you might get that double on day 3 when it makes that big pop up to 395, or maybe you get the double on the day 11 of the 12-day pattern where it comes up and it jumps up to above 390. But this is the area where I would go in and I would take a look and say, all right, if I've spotted an opportunity, what can we do with the actual stock itself? Now, this is what I want to do. I'm going to go back and I'm going to bring us to today's date. And I'll actually want to do is I want to look at some options now. Right now, let me mention this very quickly. This is not a recommendation. All right, I am showing you how I go through and look at trades, and then we'll finish up on patterns before I get into TikTok trading. We'll finish up on patterns. I'll show you guys some ones that might bear some further research on your part. All right, so let's go to the options, option chains. And now remember, when we're looking at money calendar as an example, when we're looking at money calendar, I want to say, I have a couple of things here. I know that the pattern goes to the 29th. This is great. The pattern goes to the 29th, and the average trade is somewhere around $5. So all I need to do those two things to pick the perfect option trade. All right. So here's what I'm talking about. All right. So if we go to the perfect option trade, well, what's the perfect option trade, Tom? Well, remember, we go to the 29th. So here's the 18th. That's not far enough. Here's the 25th. That's not far enough. October 2nd might be a good one. So we can look at the October 2nd. That has 18 days to expiration. Okay. Now, once again, how far do we go with LMT? About 5 points. All right. Last year was only 227, but the year before was 18.5. So, you look at the last few years and you've got more than 5-point move. So let's use 5 points as a target for LMT. So I'm going to change my symbol here. I was looking at GameStop earlier. LMT, right? Again, we're going to look at October 2nd. So I'm going to look at October 2nd for LMT, and here's my call options. And here's the stock right now, $392.59. Now, if 400 looks like a price target, all right, then I'm looking at this right now and I'm thinking, all right, the 395s, they're $8.35. If I get the 400, I'll be lucky if I break even because the options are expensive. But what if I spread this? What if I were to buy the 395 calls and sell 400s? What can we do that for? So that's called a bull call spread. I'm going to go ahead and click the risk graph on that. Okay, so here's a trade that right down the middle is going to cost me $245. The maximum profit I can make is $255. So if we get a 5-point move, all right, we get that move in and we jump up to 400. We get to jump to 400. And we're at or above 400 by October 2nd. This trade could possibly double in value. All right, because here's where we are. Now look at this. If we just come up to and hit these areas, come up to the areas of resistance, we're already going to be over in the profit zone. And this gives us an opportunity to double our value on that. And that's what's called, again, a bullish call spread, where you're buying the lower strike and you're selling the higher strike. Okay. Let's go back to Money Counter and let's look at a couple of other things. Now, that's expensive and it's got some slippage on it too. So, when I look at these, limit orders are what makes sense to me as an option trader. I don't just throw an order in there at the market because, you're dealing with something like LMT. It's a $350 stock, $390 stock. It's going to have slippage between the bid and the offer. What else does Money Counter have happening for today, for instance? All right, so back to the power meter. And here are, again, the top stocks that I'm looking at today: Lam Research, LMT, NOC. Booking, I'm going to pass because it's only a 5. I don't like the stuff that has 5 days in it. All right, I have other patterns for that. I like the 12, 20, 16, EW 16. You got a couple bears out here too. So you could take a look at, for instance, OLED, which is a bearish opportunity. And that goes out until October 1st. All right, so that's a bearish opportunity. How well has it done? Well, its last losing date was 10 years ago. All right, the last 9 years, this thing's been profitable. And last year, it got a big kick up, all right, as the stock went down. All right, take a look at the chart. Chart goes down. This is profitable if you short the stock. So in this case, you're looking at buying puts or possibly put spreads. Okay. So that is looking at opportunities going forward today and this week for the Money Counter. Okay, so let me get to the third point that I want to discuss today, and that is what I like to call rock. And how, and my quote 9. Some 1999, all right, that was the big .com bubble, and everybody was buying. This was again where people were either had discretionary money or were making discretionary money to go in and buy literally .coms, which a lot of them became .bombs. In fact, if you remember, the NASDAQ was at 5,000. And that thing dropped down 60%, and it didn't jump above 5,000 for over a decade before it went back above 5,000. So, people that jumped in 1999 had to wait over 10 years before they even saw break even again on the NASDAQ. Well, it's starting to smell like 1999 again, because when you look at some of the things we're seeing are just unbelievable. I'm just going to share a couple things with you. So, and I was looking at my Twitter account, and my research team of the Gen Y are telling me, hey, you got to see some of the stuff out there. TikTok investors, that are now looking at 3x leveraged ETFs. And so I go through and I'm scanning through this and I'm seeing these 3x ETFs and the guys out here that are touting these things that really know nothing about them. I mean, these are Gen Y people telling other Gen Y people how to trade, right? And so, and I'm not, I'm the last guy in the world that's going to knock anybody about trading. I mean, hey, I lost my entire account when I was, I was 21, 22. Okay. So I've been there and I've done that, but I didn't go out and start promoting stuff at 21 or 22. You know why? Because I didn't have any experience. I didn't have any knowledge. And all I did was throw all my money in one thing. And that's what we're starting to see here. And we've been seeing it with Tesla. We've been seeing it with Apple. And now these guys are moving over because Tesla and Apple are not playing ball with them. And they're now discovering 3 times leveraged ETFs. And they want to know why. And I read the threads. Why did my 3 times ETF drop 90% when the ETF itself only went down 11? All right. And you dig a little deeper and you find out why. And, again, here it is. And this is one where a guy says the S&P goes down 30%, SPXL, which is the leveraged SPX, goes down 90%. Yeah, that's a 3-time ETF. That's going to hurt you. And if you have options on these things, forget about it. It drops even lower. So there was another even bigger news announcement last week. And it came up on my Bloomberg terminal. I don't know if you guys heard about it. But all of the volume that was going into Apple, for instance, last week. So I brought back up, and I have the ability to do this, is go back and research, because I have all this option data at my disposal, and I can go back and change dates and research and run what I call what-if scenarios. But I just want to show you something real quick. This is Tuesday, excuse me. This is last Tuesday, and I'm looking at the September 11th options. Now, Apple was trading at 112.82, all right? Ended up really going nowhere for the whole week. But take a look at this, the 112 half calls. These were the at-the-money calls, $3.60, all right? Now, I want to show you something else with Apple. So let's just hold this here for a moment, all right? So I'm looking at Apple. Where's Apple? Where's Apple? Is this it? Nah, this is it. Okay, so here's, is this Apple or Tesla? No, it's LMT. What am I doing here? Where's my Apple stuff? There's Apple. Okay, so here's Apple again, 9/8. I put the date back to. I'm looking at the SEP 11, and I'm showing you exactly what I just showed you on the screen, $3.60. Watch this, okay? This is, and I'm showing you this because the one thing I noticed is call options are going bananas. This was volume, 169,502 contracts traded, all right, of the 120 calls. And those were trading for almost $1. That was on Tuesday. All right, look at the 115s. They're trading at $2.40 last Tuesday. Nearly 65,000 contracts traded hands. Okay, so over here, even the puts were going crazy. I've never seen the kind of volume that I've seen. Now, 2 areas hit me. Number one, SoftBank, because SoftBank's been buying options on alpha stocks like crazy. You know what they've been doing? They've been selling them too. But number 2, retail traders have been coming in buying up like crazy as well. But here's how I can look and see how, what's been going on with these. So I'm going to look at the 112 half calls. And this is what I have the ability to do. By clicking in here, I can actually see the last couple days of what's going on. This is Apple, right? This is Apple 9.2, 9.3, 9.4, and 9.8. And you can see this is the options. These options were bid and offered. They were near 20 points on the 2nd of September. By the 8th of September, they were down below 5. Look here. This is the IV, the implied volatility on Apple, which was at 75, and then 90, and then down to 60. IVs all over the place. These are Greek option Greeks as well. But this is the area I thought that was most interesting. Option volume, which was a couple hundred, and all of a sudden, boom, 6,000 one day. Boom, 6,000 one day. Hey, it gets better. Watch this. So let's take a look at these SEP 11 options on September 11th. So what happened to them? So here's the options again. Now, again, this is 9.2, but this is what happened on the 8th, the 9th, the 10th, and the 11th. It literally started below 112, and it ended at 112. Those options, which were 20 points, well, they're worth 0 because that option expired out of the money. IV goes to 0 because time value's gone. Delta, gamma, theta, let's get past that. Look at the option volume, guys. I mean, now this is 4, now 8, 9, 10. These are thousands Thousands, and then boom. I mean, big time volume that came in. And look at the open interest. The open interest was up there too. Somebody was trading these things all the way up to the end of the day and then tried to sell out of them at the end of the day and got almost nothing for them. Okay, back to TikTok and Robinhood traders. Okay, that's what's going on with TikTok Robinhood. And so I share that with you just to kind of end our time together and just show you that, you know, be very careful with these particular positions where, you know, there's a reason why people are asking, hey, how come you're not trading Apple, Tom? How come you're not, you know, how come you're not into, you know, the Apple and Tesla trades? Well, because that's where everybody was. The crowd was going into Apple. The crowd was going into Tesla. And I'm a rules-based trader, okay? I go where my rules tell me to go. I go where my patterns tell me to go. Am I right all the time? No. But I take an unemotional approach to trading, okay? Win some, lose some, but all the time I'm looking for this to happen. I'm looking for that rise, that overall rise in equity. Okay, I follow my systems when I'm winning. I follow my systems when I'm losing too. But where I don't go is where the emotion is, because where the emotion is where people will drop a lot of cash very fast. There are people in this room know what I'm talking about, because that does indeed happen. Is that, you know, people will get off their game and they'll immediately realize what can happen when you get emotional when it comes to trading. All right. So, guys, again, I want to thank you for being part of the our group together today. Glad to be back. Glad to be back with you. Take a look at all of our information. And Mike, I appreciate the comment there. Tom's Trading Room. We got a lot of good info out there. YouTube.com/Tom Trading Room. If you want to see what we're doing, and we really we do one of about 3 different things in this room with our videos. We're either talking about stocks, we're talking about strategies, or we're talking about the overall market. All right. So the one we put out lately that you know, that said sell this crap now. Guess what? It wasn't about stocks, but it was about stocks. But it was about a strategy where you sell the junk to somebody else. All right. And for those of you that wonder, I'm still in New York. I'm going to be in New York for a little bit longer, but I'm packing up, and me and Mrs. Pattern are going to be heading back to Florida here within the next a week or 2. So, guys, have a great rest of your day. I will see you again next week, and we'll do it all over again. Thanks again. We'll see you soon. Bye now.